Good morning, guys. Welcome to TalentBlazer, India's latest edtech platform that is there to help you at every stage of your career. Now, I'm your friend and teacher in this journey. My name is Gaurav, and I am covering UGC NET Paper 2 Commerce. The subject code for the same is 08. And this is Unit 7, titled Banking and Financial Institution. I've already made a video on it, and so if you haven't watched that video, please give it a watch first and then continue this video because they are interrelated, interlinked, and there is a sequence that has to be followed. So in this video we'll talk about banking comprehensively, what are the major banks and under what categorization of banks are in our country. So that is very important for your examination, right? So we'll start with what is banking. Right, Section 5, Subsection 1B of the Banking Regulation Act 1949. So you have to remember the section, you have to remember the year because that can come in an MCQ paper. So you have to remember Banking Regulation Act 1949. You can get many options 9040, 9048, 9047 or 90 and 9049. So you have to mark 9049, the right option. Defines banking as the accepting or for the purpose for lending and investment of deposit of money from the public, repayable on demand or otherwise, and withdrawable by check, draft, order, or otherwise. So, if I have to sum up the definition, so banks what they do is basically they accept deposit. Why do they accept deposit? Because they need money to lend, and people can lend to construct new things or for capital formation activities. All of this has been discussed in the last video. Now, of the deposit from the money from the public. So if I am depositing my money in the bank account, that money is being used somewhere else. And repayable on demand, let's suppose, repayable on demand basically means, let's suppose if I want to withdraw any amount of money, there is a certain limit as well. But if I want to withdraw 1,000, 2,000, 3,000, I can do it on demand right now. Even if I want to withdraw some amount of money from my bank account, I can do it right around. So that is repayable on demand or otherwise, and withdrawable by check. So if I write a check, my bank account will be debited and will be credited to the person who I'm writing the check to, and draft order or otherwise. So this is the definition of banking. I hope everyone is clear till now what is the definition of banking, right? So specifically for your examination purpose, you need to remember the section and in which year this act came, right? Banking Regulation Act 1949. I hope everyone remember this. Now, what are the functions of commercial banks? So, function of commercial bank, first one is creation of credit. So, they basically create credit. They lend funds because I am depositing the money. Someone is going to the bank to get some loan to build a house, to build a company or start a new business. That is lending of fund. They manage the resources because I am depositing my money and there are multiple people, millions of account holders. Say all are depositing their money in the banks, and they have to manage the resources. It's not like that the resources are not well managed because you have because there is a guidance, there are some guidelines given by RBI, the Reserve Bank of India, the toppest bank, and the central bank. So they have made sure that every bank operates transparently and they're accountable to the people, right? So they have to manage the resources well. If let's suppose if I am depositing my money and bank goes bankrupt, that they don't have the money to repay me back, that would be a troublesome position because people will lose their faith in public system, banking system. And lastly, the last function is acceptance of deposit, right? So acceptance of deposit is very important because what bank does is they actually have the deposit account, they have saving account. So I actually save my money in bank rather than at home, right? So they have manage a trust that I have to make sure that I place my money in the bank account rather than keeping at home, thinking that my money is safe at home. Better to say, keep the money in bank, they are safe there. And second thing, I can get interest over a period of time as well. So these are the functions of commercial bank, creation of credit, lending of funds. How does they create credit is basically, I saved and certainly bank use that money to give some loan, and then that money circulates in the economy, right? It's not like they are not giving that loan for leisure activities. Those money has been given as loan for capital formation activities. So capital formation will actually make, if I think most of you must be knowing about the multiplier effect in economy. So one a 10 rupees would be would make 100 and 1,000, and that's how it will grow, right? So that these are all the functions of commercial banks. Now, the next thing that we have to cover, what are scheduled commercial banks? Right. Scheduled commercial banks are in India are categorized into five different groups. Now, what are the scheduled banks? Scheduled banks are those banks which are mentioned in the RBI Act second schedule 1934. So they are mentioned in the second schedule of RBI Act 1934. You have to remember this. Your examination is an MCQ based question. MCQ based examination. So you must be knowing what are the points and how the question can come up. So second schedule of the RBI Act 1934, schedule commercial, all those banks that comes under the that schedule are the scheduled banks in India. And those who are watching the video, I have just one question. In which year RBI was established? I hope those who are watching, please do answer this question as well, so I get to know whether you are preparing for the examination or not. That one way to interact. So if you know the answer, please write in the comment section in which year Reserve Bank of India was established. Now, scheduled commercial banks in India are categorized into five different groups according to their ownership and or nature of operation, right? So, scheduled commercial banks are categorized into five different groups in India according to their ownership and or nature of the operation. So, first is State Bank of India. Uh, yeah, another question for you guys. What was the previous name of State Bank of India, right? Because it wasn't known by this name before independence. So there was a different name of SBI. So if you know the name, do write in the comment section as well. These are the two questions that I actually want you guys to respond to. State Bank of India was known as. Please do mention in the comment section if you know the answer. If you don't, do give it a search. After a while, I surely will provide you with the right answers as well. So first is State Bank of India. Second is nationalized bank. Those are owned by the government. Then there is private sectors bank. Then there are foreign banks as well. You must be seeing that there are multiple foreign banks in our economy these days, in our country, in our city. And lastly is regional rural banks. Every bank has its own importance and their own set of functions and their own set of customers to they whom they cater to. Right. So firstly we'll talk about public sector banks. Right. So in public sector banks, what are PSB? How a bank becomes a public sector bank? These are the banks in which the majority is more than 50%. I hope everyone who is watching the video knows this, that the banks where a majority stakes more than 50% is held by a government, right? So in a government bank, in a public sector bank, more than 50% is owned by the government. The share of these banks are listed on stock exchange, so you can basically buy. There are total of 12 PSB, public sector banks in India. The largest bank and the oldest still in existence is State Bank of India. It originated, so you actually got your answer here as well. It originated as Bank of Calcutta in June 1806. So this is the history of SBI. I hope everyone who's watching the video, you will find very useful because you can easily get a question on this. The largest bank and the oldest still in existence, that is State Bank of India. It originated as Bank of Calcutta in June 1806. It's that old. In 1809, it was renamed as Bank of Bengal. This was one of the three banks funded by a presidency government, right? The other two were the Bank of Bombay. So, that time when we were under Britishers' rule, there were still banks in our country. I think those who knows about this, it won't be a shock to them, but those who are not aware, that there is something new to learn for you guys. So it originated as Bank of Calcutta in 1806. In 1809 it was renamed as Bank of Bengal. This was one of the bank which was funded by presidency government. And in 1840, Bank of Bombay and Bank of Madras were other two banks. The three banks were merged in 1921 to form the Imperial Bank of India, right? So there were three banks. One is Bank of Bengal, second is Bank of Bombay, lastly is Bank of Madras. So if you don't have to memorize them. You can easily guess. At that time, Bengal was a famous place for Britishers to stay around, and it was a resourceful state, and it was known widely back then. So, Bank of Bengal, and it was quite developed compared to other states. So, Bengal, Bombay, and Madras, right? So, these three banks were under the presidency government. These three banks got merged, and it got a name of Imperial Bank of India, which upon Indian independence became State Bank of India in 1955. So, State Bank of India 1955. I hope everyone remember this now. State Bank of India 1955, right? So, these are public sector bank, and we have just discussed the brief history about SBI. Now, what are private sector banks? The private sector banks are banks where the greater part of share of equity are not held by the government, but by private shareholders, right? So private sector banks are those banks where the greater part of the stock of the share is not held by the government but by the private shareholders. At present, there are 21 private sector banks, of which 14 are old and 7 are new. Right, so private sector banks are different from public sector banks. How? In public sector banks, the majority of ownership is in government's hand, like more than 50%. In private sector banks, it's quite opposite. And at present in India, there are 21 private sector banks, of which 14 are old and 7 are new. Right. So this is about private sector banks. Now, there are certain guidelines on private sector bank by whom? Reserve Bank of India. And right, I have a question. So you do answer the first question as well. So second question about SBI, I think we have covered that in the video. So you don't have to respond to that. RBI guidelines on private sector bank. It is very important because we need to know what are the guidelines. Can I go tomorrow and set up a new private bank? No. Right, there are certain guidelines that has to be fulfilled, and then only I can uh, open up a private sector bank. There were certain criteria set for the establishment of new private sector banks. The bank should have minimum net worth of rupees 200 crores. You can easily get a question from here. What are the guidelines of private sector bank? There are four options. Five or six options. So there will be in MCQ option A will be A B C D. Which one of the following is correct? So you have to find what are the guidelines for a private sector banks, right? So you have to remember the numbers as well, the figures. The bank should have a minimum net worth of rupees 200 crores. The promoter's holding should be a minimum of the 25% of the paid up capital. Within 3 years of starting of the operation, the bank should offer shares to the public, and their net worth must increase to not by 300 crores, right? So if a bank is operating for 3 years, they have to make sure that their shares are public right now. Foreign investment in private sector banks would be permissible up to 75% of paid up capital of the bank, right? So foreign investment, there is a certain limit that is up to 74%, right? Earlier it was less, it was 14, and I think before that it was 22, but now it is 74. And this is a great initiative because now foreign investors can invest in our banking system in private sector banks, right? So these are the criteria. Minimum net worth 200 crores. Promoters should hold 25% of the paid up capital. Within 3 years of their operation, they have to make sure that they are public, right? And their net worth should be increased to 300 crores. And lastly, foreign investment is up to 74%, right, of the paid up capital of the bank. So these are the guidelines on private sector banks by RBI, right? So in case if you are liking our content that we are providing, so please do leave a like and do respond in the comment section as well to the question that I have asked, and anything that you want to communicate about the lessons, about the classes. If you want to talk about it, you can easily talk about them and in the comment section, and do leave us up to the channel as well. Now let's continue. What are the foreign banks operating in India? We have few example: US Bank, Bank of America, Citibank. Right, most of the people are confused that Citibank is a foreign bank, right? So Citibank is also there, German bank is there, UK Bank, and HSBC, or HSBC Bank India, Barclays, Standard Chartered Bank. So these are the example of foreign banks operating in India, right? US Bank, Bank of America, Citibank. There is a picture for you all to remember that as well, because pictorial references are uh, easy to grasp for the memory.